Good morning, everyone, and thank you for choosing Market Briefing analysis of today's financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial news, June 29, 2023. Stocks waver with hawkish central banks in focus, markets wrap. Stock markets struggled to find direction today, as hawkish comments from central bankers kept investors cautious. The cautious tone in the markets was accompanied by a rise in the dollar, which strengthened for the second consecutive day. This followed remarks from Federal Reserve Chair Jerome Powell, who stated that at least 2 interest rate hikes are likely necessary this year to bring down inflation to the central bank's target. Despite the cautious sentiment, there were some encouraging earnings updates that provided a glimmer of positive news for investors concerned about the economy. Renault SA, the French car maker, saw a rally in its stock price after upgrading its full-year earnings guidance. The company attributed this positive outlook to strong sales momentum from its new models. Hennes & Mauritz AB, the Swedish retailer, also experienced a climb in its stock price after reporting a smaller-than-expected decline in earnings. The company managed to cut costs and make progress in reducing its inventory buildup. Looking at the broader market picture, major equity indexes were relatively steady. U.S. futures remained little changed, while Europe's stock 600 remained flat. In Asia, a gauge of Asian equities slid in lackluster trading. Meanwhile, Treasury yields rose across the curve, reflecting the market's response to the hawkish comments from central bankers. European Central Bank President Christine Lagarde and Bank of England Governor Andrew Bailey also emphasized the need to rein in inflationary pressures, signaling a similar stance to the Federal Reserve. Investors continue to debate the outlook for U.S. equities and the resilience of the economy in the face of elevated interest rates. Earlier in the week, stocks were buoyed by strength in U.S. consumer confidence and home sales. However, there are concerns that as the hurdle for positive economic surprises gets higher, investors may start rotating into other regions, such as Japan and Asia. In other market news, Bank of America Corporation and Wells Fargo & Company led gains in the financial sector after passing the Federal Reserve's annual stress test, clearing the way for payouts. This news provided a boost to the sector and reinforced confidence in the banking industry. Turning to Asian markets, the offshore yuan experienced a slight decline, despite China's efforts to support the currency. China stepped in for the third time this week, setting a stronger than expected daily reference rate. The Japanese yen, on the other hand, fluctuated against the dollar as traders weighed comments from Bank of Japan Governor Kazuo Ueda. Ueda struck a dovish tone on the short-term outlook for monetary settings but hinted at the possibility of normalizing policy if inflation picks up next year. As we look ahead, key events to watch this week include Eurozone economic confidence and consumer confidence data, U.S. GDP and initial jobless claims, and important releases from China such as manufacturing PMI, non-manufacturing PMI, and balance of payments data. These events will likely influence market sentiment and investor decisions. Before we continue with our analysis, we'd like to remind you of your support for our channel Market Briefing analysis of today's financial news. If you're enjoying this video and find our content useful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and bring you even more quality content. Now, let's get back to the financial market news and the latest updates. In today's market wrap, we witnessed a rebound in stocks, with major U.S. indexes staging a tech-fueled rally and shaking off their multi-day losing streaks. European markets also traded higher, with the Pan-European Stoxx 600 breaking its 6-day losing streak, thanks in part to a surge in shares of fintech company Wise, which reported impressive income growth of 73% year-on-year. However, amidst this rebound, recession warnings have been sounding. HSBC Asset Management predicts that the U.S. will slip into a recession in the fourth quarter of this year and will continue to languish in it throughout 2024. Additionally, the Eurozone is expected to see its economy contract next year as well. On a positive note, this forecast suggests that inflation will fall quickly, and HSBC expects the Federal Reserve to cut rates by the end of the year. European Central Bank President Christine Lagarde has also expressed concerns about inflation in the Eurozone, stating that it is still too high and is set to remain so for too long. In May, headline inflation for the region stood at 6.1%, 3 times the ECB's target of 2%. Lagarde indicated that it is unlikely the ECB will pause or cut rates anytime soon. In other news, Unity shares experienced a significant jump of over 15% following the launch of its artificial intelligence software marketplace. Unity, known for its game engine, now allows users to choose AI software from other companies to enhance their graphics, text, voice, and more. This development has attracted investor attention and contributed to the rise in Unity's share price. Legendary investor Seth Klarman of Bopos Group also made headlines with his insights on the market. In an exclusive interview with CNBC, Klarman highlighted common mistakes made by regular investors when buying index funds and identified potential hunting grounds for investors seeking opportunities. His perspectives provide valuable insights for market participants. While recession concerns loom large, recent economic data from the U.S. paints a slightly more optimistic picture. Consumer confidence has risen higher than anticipated, reaching its highest level since January 2022. The proportion of respondents expecting a recession has also declined. The housing market, often considered an early indicator of economic downturns, showed surprising strength, with new home sales in May surpassing expectations. Demand for durable goods also accelerated, indicating resilience in consumer spending despite higher interest rates and the specter of a recession. These positive economic indicators suggest that the U.S. consumer might play a crucial role in defying recession predictions. If Wolfe Research's chief investment strategist Chris Sinayek's expectation of the U.S. consumer being the primary driver of the economic outlook holds true, it could potentially help the U.S. economy weather the storm and avoid a recession. Some of the main moves in markets. Stocks. The Stoxx Europe 600 was little changed as of 8:20 a.m. London time. S&P 500 futures were little changed. Nasdaq 100 futures were little changed. Futures on the Dow Jones Industrial Average were little changed. The MSCI Asia Pacific Index fell 0.4%. The MSCI Emerging Markets Index fell 0.5%. Currencies. The Bloomberg Dollar Spot Index was little changed. The euro was little changed at $1.0917. The Japanese yen was little changed at 144.60 per dollar. The offshore yuan fell 0.1% to 7.2522 per dollar. The British pound was little changed at $1.2642. Cryptocurrencies. Bitcoin rose 0.8% to $30,356.63. Ether rose 0.7% to $1,844.75. Bonds. The yield on 10-year Treasuries advanced 4 basis points to 3.74%. Germany's 10-year yield advanced 4 basis points to 2.36%. Britain's 10-year yield advanced 2 basis points to 4.33%. Commodities. Brent crude fell 0.3% to $73.79 a barrel. Spot gold fell 0.1% to $1,905.11 an ounce. In conclusion, we'd like to thank you for watching Market Briefing analysis of today's financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more fascinating news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.